Hello, everyone. Thank you for tuning into this profitable video. In the next 3 minutes, we'll take you through how a particular investment can be good or bad for you. So, what are we going to cover? How can someone be happy and someone be unhappy with the very same investment? One small difference and how it can change everything. Next, we will also just tell you about what's happened in the market in the last 12 months and outlook from here on. Of course, a disclaimer, mutual fund investments are subject to market risk. So two interesting calls happened recently on the very same day. Names are fictitious. Anjali called and wanted to increase her SIP in her existing fund. She was very specific that can we invest in that same fund A. So my reaction as a financial planner, that's great. High time for you to step up the SIP because she's not stepped it up very recently. Same evening, coincidentally, Rahul calls and says, can we review his SIPs and change one particular SIP? And surprise, surprise, it was the same fund which Anjali wanted to invest, and Rahul says, can we review and change the SIP? My reaction as a financial planner, well, we'll get back to you. So, what exactly was the background? Why did Anjali call happy with her performance? Well, her fund had given her a performance of almost 22% annualized returns. And Rahul, with the same fund, got around 4% annualized returns, both investing in exactly the same fund. So, what exactly has happened? Well, here's what actually happened. Anjali started investing via SIP in this fund in 2020, about 5 years back. And Rahul started his SIP in the same fund about a year back. So, what is the fund delivered? The last 10 years via SIP, the fund has given almost about 19%. Last 5 years, about 22%. 3 years, close to 19% again. But the last 1 year, the fund is given about 4% returns. And that explains why Anjali is very happy with her investment and Rahul is not. So, what does this mean? Has the fund gone bad, has started underperforming? Well, actually, not really. The fund is still amongst the top quartile in its category. But, well, the markets have had a decent correction in the last 12 to 15 months, more sideways than any sharp correction. But that has led to this kind of a performance. So, important learning that SIPs also need time to stabilize and generate returns, depending on the markets. So, they can take even 3 to 4 years to start showing you meaningful returns and gains as such. Now, what has the market done in the last 12 months? They're slightly down. And why did I say a welcome correction? I'm just taking you through this data. Not very sure if you can see it, if you're seeing this video on the mobile. But what happens is that this is past data over the last 20 years, what last 12 months have done and what the next 36 months have done. And an average when the markets have given negative returns, the markets have actually over the next 3 years given us anywhere between 16 to 20% annualized returns. So that makes it so much more exciting that a correction currently might actually lead to much better returns. And it's very logical, right? If there is a correction without any major reason, that means that the valuations are getting better. And then when the next recovery like happens, we tend to get better returns. So that's the idea, that's the logic, that this correction is very welcome as such. So key takeaways, well, SIPs can be volatile in the initial years, and over a period of time, they will start showing you the benefit of compounding. That'll mean a fund can be a bad fund for 1 year, but over a period of time, it can become a good fund. So tracking returns in the SIP returns in the initial 3 years will not help you financially, but yes, it can cause fluctuations in your heart rate. So be mindful of that. About our markets, markets have had a sideways correction in the last 12 to 15 months. And hopefully this will continue for another few months. I'm not getting into the reasons Trump has done this, Trump has done that, or Fed has done something else. But just that right now there is uncertainty. And markets are likely to remain undecided as such. This might sound boring, but as I shared the previous slide, this could actually be a great time to be building up the investments before the next up move happens. Because India, as such, there's no real problem in terms of the economy slowing down slightly because of the global factors, but no real problems, no real challenges. So hopefully, we should actually have a good 3-4 year period beyond this. Thank you. Hope this helped. If it helps, do share it with friends and family, and also give us a like. And happy festive season ahead. Thank you. Good day.